Ladies and gentlemen, gold prices have crashed terribly alongside with silver prices. And a lot of people are asking me, why, Mr. Lu, is gold and silver prices crashing terribly? Is the crash going to slow down or stop soon? Is it going to rebound? The answer is yes, I do think that it's going to rebound. And what are the circumstances that can help the rebound? Today, I will attempt to go through the whole story, why it first crashed, and then why I think a rebound will happen. Let's watch on, shall we? So before we start, I would like to request everybody to hit subscribe and remember, click like, and you'll be able to catch the real-time report that I provide, as well as my live stream. So let's go on. So we're going to answer today why is gold prices crashing, along with silver as well, and why I think a rebound could be in the near time horizon. So gold has risen to a phenomenal $5,300 over per ounce. That was just early this year. Last year, it's registered a phenomenal 60% over rise, and we thought this would last forever. To our surprise, it has crashed. Right now, it is at $4,100 over. It has fallen by a massive 20% over crash. Silver is even worse. It rose phenomenally and it crashed terribly. So it hit a high of $106 per ounce or so, and now it has fallen by almost half the price. So it is a terrible crash, and everybody is wondering, why am I losing so much money so quickly and so suddenly? Well, so we now know that the real reason is somewhat linked to the Middle East war. So ever since the war started, oil prices have been rising, and concurrently, gold and silver prices has been falling phenomenally. So right now, gold and silver is now at 22% from all-time high for gold, and silver at 45% from all-time high. And it possibly will go down even more if the oil prices keep rising. A lot of people are asking me, why, Mr. Lu, is there such a correlation in a negative way? So let me give you my perspective. It's all about inflation. So when oil prices go up, and economists call it an oil shock. And by the way, this is not the first time the world has experienced oil shock. It's quite a common phenomenon in history that we have got oil shocks. So when oil prices go up phenomenally, then there'll be an inflation experience generally across the world. When we experience inflation, the monetary authorities, the central banks, the Federal Reserve across the world generally have only one response: increase interest rate. When they increase interest rates, the real yield increases. So this, as a result, causes people to now start thinking, if I put money into gold, I don't get any returns at all. The only thing I hope is the gold prices will go up. But if I put money into money market fund, put into fixed D, put into bonds and bills, it gives me now a higher return because interest rates have gone up. So now that poses to me a dilemma. Maybe when inflation was lower, the dilemma was closer, was not so big a deal. I will tend to look at more on gold. But as the inflation goes up higher, the monetary authority and the central bank and the Federal Reserve would spike the interest rate quite phenomenally, like in the oil shock. This will cause people to now swing from gold to higher returns alternative, such as those that yield high interest, fixed D, T-bills, bonds, and so on. And that's the reason why gold prices crash whenever there's phenomenal rise in inflation, but possibly could lead on a significant rise in interest rate. So a lot of people say, but isn't gold a wonderful hedge, an asset of protection that shines during war and conflict? Yes, that is absolutely true. Except that when war leads to inflation, that's a different matter altogether. So whenever inflation hits, then the concept of gold as a safe haven asset is now secondary. So everybody is now very sensitive to inflation and interest rate. But silver crashed a lot more than gold. Why is it so? We call this a higher beta asset. That means relative to gold, it is a lot more sensitive to things that happen across the world. So it is a lot more volatile. Why is it so? Well, it gets hit from two angles. Number one, it gets hit from inflation fears that leads to higher interest rate, and people will then substitute silver out to alternatives that gives high interest rates, such as money market fund, T-bills, bonds, and so on. And the second thing is, whenever inflation goes up like an oil shock, it will cause growth industries across the world to have less production. And silver is highly used in the production of many things. And as a result, the demand for silver also falls. So we get hit on both sides. And that's why silver falls harder than gold. So, but let's focus our attention right now on gold. So, Mr. Lu, will the gold rebound? It's all dependent on oil prices. So we now understand that how oil prices leads to inflation, inflation possibly leads to higher interest rate, and high interest rate leads to a possible crash in gold prices, which we are seeing right now. So the question really is, the oil prices going to come down? Well, obviously everybody know by now this whole oil crisis is driven by the Middle East war between US and Israel versus Iran. And the Straits of Hormuz right now is essentially being choked. And oil, 1/5 of the world oil cannot go through. And as a result, oil prices across the world now all go up. So it really depends on the geopolitical situation, the progress of the war, how it turns out, and that would determine the direction of the oil prices, and that will also determine the direction of gold prices. Has gold prices fallen significantly in history? Yes, many times. And let's take a look in history when gold prices fallen significantly. Well, in 1973-74, when there was an oil embargo, gold prices fell significantly by 48%, more than now. So that was early 70s to mid 70s. That was the oil crisis, a similar one. Now, another case was when Paul Volcker, in an attempt to fight inflation in 1980-81, he spiked the interest rate to the roof. Paul Volcker was a Federal Reserve chairman then of US. He increased the interest rate massively to 15-20%, and that caused a massive crash in stock market, caused a massive recession, and also caused a massive fall in gold prices from $850 to $300. That's a significant fall. So interest rate rise will lead to gold price fall, and many more equivalent or similar cases. So gold price is not as stable as some people think, and gold is not a stable asset. It's a highly volatile asset, and everybody should be careful of touching it. So we now know that gold prices could spike very quickly and could fall very quickly as well. So I think the lesson from 1981 to 82 really give us a good heart awakening. There is a massive spike in interest rate that will hit gold really hard. So we got to be careful of it. So what 1973 and 74 teaches about 2026? Because there is a lot of similarity. So gold response to oil shock is not linear, right? So if the increase, first of all, there is a war. War generally, leads to gold being more in demand because there's instability. But the minute it leads to oil shock, inflation environment, then the reverse will happen because everybody is fearful that inflation will take place and interest rate will go up. And when will this whole thing go away? Well, when the inflation goes down. So we are now looking at, is there a possibility that inflation fears will go down? At the heart of it is all about war, oil prices, interest rate, inflation rate. So this sell-off is completely war-driven, conflict-driven, and oil price-driven. The good thing about this is that we know that no conflict in the world lasts forever. All wars will come to an end, especially in Middle East. They will come to an end, and when it comes to an end, the oil flow will continue and gold prices will suddenly rebound. What we are not sure from a geopolitical angle is when the war is going to stop, or at least come to a level where the oil flow can now continue instead of now being choked at the Straits of Hormuz. So yesterday night, I talked about my insights from a very secret source. There could be a military operation that would possibly take over the Krk Island or Haq Island in Iran. And maybe after that, there could be a negotiation between both sides to free up the Straits of Hormuz and maybe even bring the conflict to an end. It's hard to say. I'm not a geopolitical expert to see whether this will or will not happen. And I don't even think anyone in the world will know whether the outcome is going to be for sure, in favor of the US and Israel collision or in favor of Iran. But however, as I said, all wars will come to an end. Eventually, the gold prices will rebound when inflation comes down and the fears of an interest rate spike dies away. So it all depends whether you believe in that. In between, could the gold prices fall some more? It could if oil prices continue to spike even more. But even that is difficult to determine. Right now, the situation over the last 24 hours is very fluid. Donald Trump is warning that he will strike power infrastructure of Iran, and Iran has also warned that if that happens, they will strike all out to the Gulf countries' power infrastructure and maybe even desalination plants that will threaten the existence of some of these countries' people. So things could escalate very fast and very furiously, but things could also cool down very quickly as well. So in terms of gold, I think it's too volatile for me to touch. Some of you love it, some of you like it, but I don't touch it. I only touch globally diversified portfolio. I only believe in crash buying of certain asset. However, I'm not going to say whether it's right or wrong for you to do it. So let's watch and see. I'll keep everybody updated tonight in a live stream, possibly at 11 p.m. So remember, hit subscribe. Don't miss the live stream as we are now very near, certain triggers, right? So with this, thank you. And I'll see you tonight in a live stream. Bye-bye.